We made it. Okay, look, I told all of you Friday that I would have this video out late today. I usually get these out in the morning, but I suppose better late than never, right? Look, here we go, people. Let's talk. This is my newest segment of Markets, a Look Ahead. Now, we're going to put a whole bunch of things together. We're going to know what to look at, what we can expect, and what does it all add up to? How to play this game. Realize what you are involved in. It's a game. And I'm not talking about just the stock market. Life is a game. There are winners, there are losers. Pretty much that's it. There's no one else in the middle. There's either you're a winner or you're a loser, period, the end. And as you know, this blog right here is for winners. That's it. That's where we stand. All right, people, look. As I am doing this video blog, this can change, but as I am doing this video blog, stock futures are higher. No surprise to you. The MMRI, the Mannarino Market Risk Indicator, nailed it. Janet Yellen was over here talking about crashes and crisis and calamities. Stock market took a dump. The MMI dropped, saying, buy the dip, everyone. Are you stupid? Well, it definitely paid off here. We got energy taking off. We got the banks doing phenomenal. Several weeks ago, I said, people, buy the banks. If you are a subscriber to my newsletter, hint, it's free. There's a link in the description of this video. I told you again, buy the dips in the banks. We had a dip, bam, higher again. Crude oil, people, WTI is at $76 a barrel, going much higher, okay? There was no, that supposed top, the Kramer top was dog shit. It was dog shit, sorry. It was no top. This was a pullback, which is bullish. Market's going up. Crude is going to pull the market higher with it. You know how it works. It's really silly, but let's talk about it. The energy sector gets a boost off of crude oil. The banks get a boost off of crude oil. It pulls the whole market with it, people. Look, you're looking at a guy who clearly understands this market is in la-la land. La-la land. It has no bearing on reality. You all know that better than anybody else. But that does not mean that this market's not going to continue higher. I know how many people are sitting here. They want to bet against this market. They are betting against this market. They're going to get slaughtered. The market can stay distorted way longer than any one of you out here. Anyone will remain solvent. The market will eat you up, spit you out like you have no idea. This is why it's just so important to gain a perspective as to what is going on. Focus on, there's a lot here to focus on here. But the bottom line is, the game remains the same. Risk on. MMRI, link in the description of this video, saying risk is on. However, always keep this in mind. All right. Right now, the MMRI is showing low risk. We're just, we're still under moderate risk, but that does not mean no risk. All right. There's always the outlier. And, that's why I tell you all the time, people, keep yourself hedged. All right. Don't put all your eggs in one basket. If you have to put all your eggs in one basket, it should be in one asset. One. And it's not cryptocurrencies. If you were expecting me to say that, it should physical silver. My view will not change. Physical silver is what? What does Greg Mannarino say? It's the most undervalued asset in the history of the world. I wrote down a few things here, people, I want to keep our eyes on. All right. So like I said, stock futures right now are higher. This could absolutely change overnight. The game remains risk on no matter what's coming down the pike because the Fed is not done. Okay, all the talk of tapering, the talk of cutting back on asset purchases, it's just talk. In my opinion, it is a long way off. And even if, like I said, the Fed were out in an attempt to maintain the slightest bit of credibility, they have no credibility in my view, and I am certain in yours as well. But let's just say the Fed says, you know what? instead of buying $140 billion minimum per month, because that's what they're doing, 100 billion per month in treasuries and 40 billion per month in mortgage-backed securities. This is per month. These are minimums. There's no top. So let's just say, oh, we're not going to do 140 billion. Maybe we're going to do 130 billion. Duh. You really think that's going to make any difference? Honestly, is the market going to crater off of that? How about no? And that would be a minimum purchase. Oh, we're going to lower our minimum purchases. Instead of 140 billion, we're going to make it 130, 120. You gotta be kidding me. Really? It's going to really set the market on fire? It's all over? No. The MMRI, you watch it. It's probably going to fall. Anyway, keep your eye on that. Period. The end. Crude oil, like I said, $76 a barrel. I think it's going much higher. It's going to pull the market with it. 10-year yield, 1.46, came down. Dollar came down. These are being reflected yet again. Where? MMRI. You don't even have to look at the 10-year yield or the dollar anymore. It's all figured into the MMRI. You get it? Follow the MMRI? I think you are. People, last week we got a couple of very interesting pieces of economic news. We found out what? Inflation is surging. Core inflation skyrocketing at its fastest pace in 30 years. We haven't seen anything yet. We also found out that manufacturing here, okay, it's hurting. We all know that. But we also found out that factories, okay, are having to pay a lot more for raw materials. And guess what? Those costs are being passed on to you. I'm telling you, people, to watch out for a few things, and that is the next wave of inflation. The next wave of inflation is going to hit. It's already hitting, and I think it's going to take a lot of people by surprise. And you're going to hear again the narrative. The narrative is very simple. Oh, the Fed's close to tapering. It's all nonsense. It's just a mechanism. It's a tool. You understand? They're using the mouths. The Fed presidents are using their mouths as a tool. That's what they do, to jawbone a particular action to occur, but the market doesn't believe it. The market does not believe the Fed is going to taper anytime soon. You can see this reflected in the 10-year yield. You can see this reflected in the dollar. You can see this reflected in the MMRI. So what does this mean? The game remains risk on, okay? And other assets, gold, silver, cryptos, you got to have them. People, you got to have them in your portfolio, in my view. I'm not going to change that perspective. I think you all know that. The game is not going to stop. The game is not going to change. And I say good. I say let those out here, and I'm referring specifically to JP Morgan, the largest rigor of all time when it comes to the financial markets and everything connected to it. They are so powerful. They're the largest bank on the planet by assets, which gives them enormous power. They can do whatever they want. At any moment, they pay a little fine. It's a token. You have to understand how that works too. When a bank, let's say JP Morgan, is caught rigging the treasury market or the options market or the metals market or LIBOR or whatever it might be, and they have to pay a fine, it's baked in. They already have that cash put aside, understanding that they're going to make 1,000 times more than whatever they're going to be fined. So they just price it in. That's how it works with regard to this market. And again, good. Let them play their game. We know what's going on here. Okay, it's in our face. With the metals markets, absolutely. They just got caught rigging the treasury markets, JP Morgan. They paid a nonsensical, really ridiculous fine. And that's the way it's going to go. They're going to continue to pay fines. They're going to continue to rig the market. The commodities exchange, the SEC, they're all going to turn a blind eye to it. Again, corruption at the highest level. We've never seen anything like this before in the history of the world. And understanding how fake the market is, all aspects of it. We can take advantage of it, and we have a tool, people. Forget about the Fed's big tools. We have a bigger tool. And in my view, that tool is the MMRI. All right? Let's keep our eye on the MMRI. It's going to tell us how much risk we should be taking with regard to the equity market, and at the same time, hedging yourself. All right. being in risk-off assets, because this is going to flip. Like, we know that. This is an environment unlike anything we've ever seen in the history of the world. So keeping ourselves hedged is the key here, all right? So we never have to worry about when this market's going to flip over. Now, this week, let's just go out on a limb here. I think this is going to be a bullish week for the market. If crude oil manages to be propped up, if the MMRI manages to stay low, stay along the market, and if we get a sell-off one of these days and the MMRI drops again, what are you going to do? Nothing? You're going to buy the dip. That's what you're going to do. Anyway, people, pretty much that's it. As always, I'll keep you ahead of the curve if you let me do that. Or you can always go off and listen to someone else if you like to. Okay, no one's keeping you here. You're not, obligated to watch my videos here. But I don't know, go follow someone else for a while and see how that works out for you. It's not going to work out too well. All right, look, love you a lot. I mean that. Have a great night. I will see you all in the morning. And it's going to be just, what's the word? Lovely.